And good afternoon. This is the Elliott Wave Daily Update for the NASDAQ 100 being recorded on Thursday, September the 4th at 2:10 p.m. Pacific Daylight Time. Interesting day today on two reasons. Both I want to go into and just kind of give a little bit of history or a little bit of look at. First being that it was labeling, and so it had to do with labeling and the internal on this third wave that we're in. And the second one was the seemingly parabolic nature of this afternoon and in the market and what was behind that and how we got clues to it. Okay, so just to go back over the market, we're still in this minuet third wave. It is forming three waves on its own as the larger pattern, which is the minute fifth wave up, is forming a diagonal triangle to the best of my knowledge thus far. So, with all of that in mind, we're inside that third wave, and which is going to be an ABC. And there's the A, there's the B, the C wave's underway, and C waves are always five. Even in the triangle, C waves are always five. And so here we are, 1, 2, 1, 2. So coming in, we had that overnight. And then it started to go up and look like, okay, maybe it can be a nice one. We can go a little bit further and finish it off, or to start to a third. But it went one, and then we got this crazy opening this morning and a lot of flipping around. Now, I want to just quickly go down to the 15-minute because I want to look at the inside of this thing. Because again, without the labeling on it, it was like, what is this? This is what the market did this morning. And so again, it's like if it would have let us sent a memo to all those algorithms saying, hey, don't mess up the Elliott structure. But then I go pull it over because it's like, well, I can't do that, so I better think of something different. And I go to the line chart. The line chart is on a closing basis. So what it does, it takes out those spikes. So we get a spike higher, spike lower. In this case, we got them both. It made it a little bit clearer as to what it was. And you can see it's an A, it's a B, and it's a C. And yes, when I pull it out, even on this, it did go a little bit rogue or irregular in the B wave. And so, and on the S&P, it did again within the C wave, put a big spike there, and then coming back down. Did not do it so much here, which kept it much cleaner in terms of being an ABC down and putting it into the wave two. Now, it's not very common. And in fact, until more recently, I would never see an irregular B wave in a wave two position. But here we are. And I've mentioned it before. This is one of the big changes that I'm noticing in, in doing Elliott in today's quantitative markets. So does not mean that Elliott no longer works. It just means it's like I'm not really even stretching it because it is a corrective pattern. And it's doing it, and it's not really breaking any rules because wave two is not finishing above or below. In this case, below where the starting point of wave one. If it did, it wouldn't be a second wave because wave two corrects wave one. There's wave one. It just went a little bit higher than wave one, no problem. It did not exceed it on the other side. And that's the one, that's the side that counts at wave two, correcting the move, not adding to it, correcting. So, and it didn't. It stayed within it. Okay, so that in place. What did we get after that? We got a pretty strong, and we can look here on the 15-minute, and it was pretty vertical. On the hourly chart, it is definitely vertical. You can't see except one little dot of a red there. There were others, but this is what happens when we get into risk on trading. And that you get to look at and you get to see by looking at the volatility, the VIX. But it's the VX, it's the future, because it's a cash market and it's tradable. And so Again, to tell you what they do is they sell the volatility, they sell the VIX, and then they take the cash and they put it into the volatility of the underlying. How they're doing that most often? They're buying calls. So buying calls. Um, and so here we are. And you started to see them sell the volatility. At the same time, I'm looking going like, well, the NASDAQ was still down. The NASDAQ was still getting, Apple and Tesla and Google were pretty much still getting, punched in the nose, punched in the nose, try to stand up, punch them in the nose. And so, but eventually it did stop. Now, what really was kind of going on behind all of that was that likely there were some order blocks down below that got taken, or when they're there and larger traders said, we have stuff to do, and so we know we can sell it down to there because that order block is sitting there. And that's exactly what they do a lot of times, but they're monetizing. So it's also a part of monetizing a position and getting ready for an expiration. All that. Now, to bring it back around, what is the other side of when they're doing risk on trades? It presents itself as a strong rally. And you go, why is everybody bullish? Why are they bullish on this stuff? Well, part of the reason here was that Apple turned around and ended up back at 239, right? Great. Higher than it was before. And Google ended up at 232. Great. So they made up for all that lost ground. So that kind of adds to the rally. And then, of course, we have everything else kind of gang up and go along with it. So the rally turns back on, and it is now, I think, partially in preparation for tomorrow's expiration. And then moving forward, it's getting in preparation for the August 19th expiration. And so building up towards that. Now, back to the Elliott, back to what I think can happen from here. Well, you can see we're inside this C wave. It's going to be 5 waves of this sub minuet. Actually, sub. Here's the sub minuet. This is the sub, but it's going to be in this color, this bluish color. And so we have 1 and 2 in place. We got 1 and 2 on the next subset down below, which is the 3, excuse me, the 3 of the 3 of C. So very powerful. So what we have here is 1, 2, and I think we might have maybe a one little pop higher, and then that'll put in this internal third. We come down in a fourth, likely not going to come back too much further than maybe 23,627, maybe somewhere in there. And then we put that 4 in, and then we go up in a 5 in the green. We go up in a 5. Maybe we get up into that level right there, 23,760. Put that, actually, no, this would be for here. But it could be here or it could be even higher. This is 1, 2, 3, 4, 5. So I think that this third can come here, and then we get a fourth wave. Then we come back down and we go back, put the 4 on it, go back up for the 5, and that's this 3. Now, this 3 would be equal to the 1 at 23,817. Well, as with this one, I'm always going to look for a little bit more. I don't want the third wave to be the shortest. Same deal for here. I don't want the third wave to be the shortest. So I'm going to be looking for a little bit more than there. So you can see how high we're going to be getting, right? The C wave, 100% equal to the A wave at 23,708. Great, get that out of the way. So now we got that. But we wanted to break to a new high more than that. So more than likely, that's just there as a marker. This is the one that starts to come into play if we can get through it strong enough. And the other markers are kind of suggesting that it should. So keep all that in mind. It's not a guarantee, but the suggestions are the market is basically saying, well, if we're going to fulfill that Elliott accordingly to the fibs, this third is got to likely come up to here. And then you get a 4, and then you go back up in a 5th of this color. And once we're done, okay, so once we get the 3, we can do the internal. So in other words, we can run retracements from that, the bottom of that where wave three started to the top where wave three finished. That'll give you the four. When that's in, you go from the bottom of one to the top of one, put it over to the low of four, and that gives you the wave five. So we can build our way back up. So right now I don't have those levels, but that's how what I will do when you're trading. And you're going to get an idea. We have a strong cluster right there, all the way up to this color, but we realize here, well, I'm looking for more. I do not want to put any pressure on this third wave within this five going up, that it has the possibility of being the shortest. So I'm going to, even if it goes to, 101%, that's going to be longer than wave one. Then I'm okay. Because wave five could extend, just that wave three can't be the shortest. Doesn't always have to be the longest out of one, three, and five, but it cannot be the shortest. So I'm already looking to build that in. So don't have to think about it twice. All right, so there's that. So I do think that we could be in that portion. Now, somebody say, well, what about downside? Well, first of all, volatility triggers would have to break. So I'm going to be keeping my eye on those. Not necessarily thinking about what's going to happen to my wave count. I'm just going to see if I think the market's going to turn and start to come back down with some force, I'll work out the wave count. Right now, I'm not suggesting that that's what's going to happen, but that's going to have to, they're going to have to break them because they held them today and they retook them today. And with that in mind, and particularly in the Qs were like crazy. For 569, I think it was. Let me just take a look. Let me down to that Q. 569 was the low. 570, 560 was the high. It opened at 570. Now, where did we have things in terms of our levels? So let me just pull those up real quick. The levels for the Q, the put wall did not get into play today. 565 did not get into play today. 569 was the volatility trigger. So had that come in, the volatility trigger, then the next easy target would have been large gamma 4. But it did come in. They went over and gave it a kick. Got down to what was the low? 569, 2 cents, 2.5 cents. So it did get a look and maybe a little kick, but it held. Then as soon as it did, it went back up and it regained large gamma 2, which was at 570. Then what did it do? It flipped through the zero gamma. What happens then? Well, that's the point where the market, where the gamma starts going from negative to positive. Buying, buying. So, and then we closed above that. We closed above it. So again, where did we close? 575. What comes up next above this is the put wall at 580. Now the put wall's been sitting at 580 for a while. We'll see if they change it. We'll see if they change it. So the same deal if we're looking in the NDX, but more importantly, it's going to be the Qs because more options trade in the Qs than in the NDX and the NQ combined. That's why I'm constantly looking over at the Qs because as the options trade, yeah, that's the way it goes. All right, so looking for the 4 and the 5 to finish this third, and then another 4 and a 5 to finish the C wave. So we have here C wave projections, 24,277. We have, believe me, and we're still only getting up to minuet 3, by the way. All of this, and we're just really only getting up to minuet 3. I'm going to bring it back out to that hourly chart. We are still only getting up to minuet 3 here. And that's this third wave. So, and that's, look what, way up here. Well, wave 3 would be equal to wave 1. Of course, there's the same story. Maybe looking for a little bit more, but not necessarily. I am looking for a new high above this for sure, but not necessarily does it have to be all the way. But that's a little bit larger picture, and that's only going out to the hourly folks. So again, I'm thinking that, yeah, let's see what kind of takes place. It does look like we should get that follow through in the market, but there will be a small fourth wave. We'll get up here and finish the third, a small four, go back up, finish the five. That's going to put in this three, and then we come back down in a four. We go back up in a five on this degree, and then we're looking at wave C, which is probably going to be up here, and then probably even a little bit higher because we're looking for that third wave to be longer than wave one. So I think all of this can extend right now, all of it. And again, if it's going to turn, pay attention to volatility triggers because that'll signal the change back to risk off trading. All right, that's it. Also, tomorrow morning, please be aware, U.S. employment data comes out. First one since the firing of the previous person who produced all of that data, ran all the models, collected all the data, and did not meet the approval of the president, who thought, ah, fake. They're fake. You're doing it against me. You don't know what you're doing, and fired him. And I believe the woman had her job for years upon years upon years, uh, providing service. So, and this will be the first one since. And we'll see what comes out, and maybe there'll be somebody else's head up on the chopping block. I don't know. All right, so that's tomorrow plus its expiration. Next update will be tomorrow morning.